terms of the type of business we do, that's a policy business which we undertake on behalf of Government of India, and as well as a commercial portfolio or the commercial book we run. Also, very interestingly, we have managed to do good inroads into the MSME. Again, given that MSMEs are a big contributor to India's exports, so we're just trying to put a section so that we have a focused approach on how we can support the MSME ecosystem in India so that they can export more. And lastly but not the least is the promotional and developmental role which the bank continues to play. Very quick, I'm sure all of you know us very well, but Export-Import Bank of India was set up under an Act of Parliament in 1981 by the Government of India. We are 100% owned by the Government of India, and we play a role in policy formulation and project export finance under the economic diplomacy. Given that we are 100% owned by the Government of India, we are the closest proxy to the Government of India sovereign, and our ratings reflect that. So our international ratings are the same as that of Government of India, which is investment grade. A substantial part of the business, when I say that is our loans and advances, are actually given on behalf and at behest of Government of India. So they are guaranteed explicitly by the Government of India. That improves the quality of our loans and advances on our books, and we have a guarantee from the government on a substantial part of our loan book. Our capital position continues to be strong, and we have access to multiple sources of funds, both in India as well as offshore. A very quick performance highlights. Our total income has gone up by 34%. Again, most of it also I would say is on account of the increase in the benchmark rates, both in the foreign currency and the rupee markets. Operating profit, I would say a modest growth of around 4%. But if you look at our profit after tax, actually it has grown year on year by almost 62%. So our profit after tax for the year ended 31st March 2024 was 2,518 crore. When we come back to the business, again very encouraging trends we are seeing. Our loan portfolio has actually grown by over 17%. And now within the 17% also, if we see our corporate book, what we call as loans which we give to companies including the MSMEs, actually has grown up by 49%. So this is something which we are seeing as a very encouraging and interesting trend, because if I just recall what we did in 2022-23, that time our corporate book actually grew by 35% year on year, and this year we are seeing that same corporate book growing by around 49%. Total business is roughly 3.5 lakh crore. Again, when we look at the key ratios of the bank, we are seeing significant improvements in almost all the key ratios of the bank. We are very encouraged to see the trend of the asset quality and the resulting gross NPA ratios in our book. So our actually gross NPA ratios have fallen by almost from 4% last year to 1.93% this year. Net NPA ratio accordingly also has come down to just 0.29%. With this net NPA ratio, our provision cover ratio stands at 97%. There has been a small drop in our net interest margin. Last year we had reported a net interest margin of 2.29%. This we are reporting 2.06%. Return on equity is quite healthy at over 15%. I mentioned earlier about our corporate loan book. So this was one of the drivers for our growth in FY24. I mentioned earlier that 49% growth was recorded in our corporate book, which is aligned with the emerging needs of the India growth story. If we look at the broad breakup or segmentation of our loan portfolio, 2/3 of our loan portfolio continues to be driven by the export finance activities which we undertake. Similarly, we are also seeing very good growth in all the champion sectors, be it clean and renewable energy, automotive, engineering goods, pharmaceuticals, telecommunications. So we are seeing lots of focus, and that also is yielding results of the growth in the loan book. And when we look at the geographical presence also, I was discussing with somebody, some of you earlier before this, is that we are seeing a good presence in addition to South Asia and Africa. We are seeing quite a bit of interest in the Latin American countries also.